Welcome back to Money May. I'm going to let y'all in on a little secret. I really want these boots. I'm not going to say the brand. They don't need any more publicity from me. But I have wanted these boots for over a year now, which is at least as long as I've been making Money May videos, but probably longer. Why haven't I bought these boots that I want so badly? Well, here's the thing. These boots are like $1,200, which means that after tax, I'm looking at least $1,400. And some of you all might be saying, well, these are $1,400 boots, so that's why you don't need to buy them. And I wish I could agree with you, but that's honestly not even the reason that I'm not buying these boots. The reason that I have not clicked purchase has to do with the topic of today's video, which is affordability. So there have been times when I had the $1,400 that I needed to be able to debit this purchase. I could have gone to the store, swiped my debit card, and the transaction would have been approved because I had that money in the bank. I also could have used my credit card. And in that case, I wouldn't have even needed the $1,400 in my account to be able to fund that purchase. I could have swiped my credit card, taken those boots home, and frolicked in the streets for 30 whole days before I even had to answer to my credit card company. And if I was someone who didn't watch Money May videos, I could have used my credit card to swipe and purchase and paid my credit card company back not over 30 days, but I could have paid them over 60 days or 90 days. I could have paid my credit card company back over years if I wanted to, as long as I covered the minimum balance, which could have been as low as $40, $50 a month. None of these scenarios indicate that I can afford these boots. And why not? I have not bought these boots because my lifestyle does not support it. When I consider my existing bills and responsibilities, coupled with other financial responsibilities and my short and long-term money goals, I know that purchasing these boots would put a strain on my real obligations. I can buy these boots just like I can kick a cat or I can act a fool in my local Walmart. But that doesn't mean that I should. Is this a buzzkill? If so, I'm on the right track. People who benefit from you spending your money, whether that be the retail salesperson, the real estate agent, the mortgage lender, the dealership, the credit card company, or check cashing place, your child, your grandchild, your family member, the Avon lady. All of these people and more benefit when you part with your hard-earned money. So they are not going to tell you that you can't afford something, even though that may be true. And that means that you have to be more savvy and more vigilant than all of the forces out there so that you don't get caught in a financial bind for a short-term joy. Let's close this episode by talking about how to determine affordability. You can just call this the why I'm not getting these boots test. So the first thing I like to consider when I'm trying to determine affordability is regular income. How does your regular income compare to the total cost of this item? Even better, instead of using your gross income, aka your pre-tax income, to determine affordability, why not look at what your take-home pay is on a quarterly or annual basis? How does the cost of that item compare to your take-home pay? That'll have you stop spending quickly. Another way to determine affordability is looking at your bills. Are last month's bills paid? Are this month's bills paid? And what about next month and a few months ahead? Do you have a savings cushion to be able to cover those future expenses? Because you know they're coming. Another metric to help determine affordability is your financial responsibilities. Do you make regular donations to charitable organizations? What about, giving money to family? Do you give $100 to grandma every 2 weeks? Is that covered if you make this purchase? And finally, what about your money goals? Did you achieve all your money goals you set for this year or for this quarter? If not, maybe you should focus on that first. And if you have, congratulations. But what about adding to your savings cushion or adding to your investment portfolio to make yourself more financially sound in the future? By the way, this affordability test is generic. You may need to add other considerations to help determine affordability. I'm thinking things like debt may be important to consider. I really caution you against using irregular income to determine affordability, though. Irregular income should be used to save more, invest more, or do something practical with it, like reducing your debt burdens. Using irregular income to spend more is a trap. Avoiding purchases that you cannot afford will improve your financial life. It frees you to achieve your money goals faster, and it makes you more financially literate. And remember that the sacrifice you make today creates more abundance for your future self. So don't cheat your future self just for a short-term delight. That's the end. Thank you for listening. Thank me for speaking. Let me know what you're thinking in the comments, and I will talk to you in the next Money May.